Good afternoon, everybody. Good afternoon. Welcome to Paul's Monday Market Update, number 233 for the Monday, 3rd of August, 2026. I hope you're all well. Hope you have enjoyed this interesting start to the week and the month. Normally we would be sort of getting ready to calm down, okay, for the rest of this month, based upon everybody going on holiday. But we live in interesting times, as the Chinese old proverb says, and there's plenty going on and plenty for us to talk about. Those of you joining us on the live stream or in the room, I hope that you can see the slides and hear my voice, okay. And if you can confirm that, fantastic. For those of you joining us for the first time, the Monday Market Update is just that, okay? It is me flying through as much as I can share with you over about the next 25, 30 minutes, looking at strength and weakness within FX indices and commodities markets, looking at a few charts of interest that you might want to add to your watch list, and then having a look at the live market. It is not a signal service. It's not trade recommendations. It is just me sharing with you what I'm looking at the moment, which may be of relevance or of interest to yourselves. As always, you are always very welcome here, but just remember that you are always responsible for your own trading and investing decisions. Okay, so few charts of interest. What is this? What are we looking at? This is JXY. This is the sort of Japanese currency index. And whereas you see me all the time look at the dollar index, all of the currencies have their own index these days. You don't really trade it, or certainly I don't, but it is a useful tool to look at the kind of bigger picture. I have no doubt that every man and his dog is basically pulling up a chart of dollar yen, and so they rightly might be, okay, and that's absolutely fine. But I thought I'd just put up something a little bit different, okay. This is, okay, Japanese currency index monthly chart, up here. Let's get the old drawing tool. Back in 2011, having been in a fantastic run, okay, through the noughties, okay, we then had that lovely bearish engulfing pin bar key reversal, peaking at the top, okay, followed by a lower high, and really, we were up here, okay, 132 in terms against the dollar, and it has literally been kind of one-way traffic. And I would look at this now, excuse my drawing, but as I say, I'm a better trader than I am an artist. I'd have seen that as a bit of a descending wedge there. So this is just giving an indication of, everybody's talked about how weak the Japanese yen has been. Well, that's a very clear indication for the last, 15 years, okay. We've been in that sort of downtrend, and certainly, okay, these last few years, that is kind of, it's been scrappy, but it's accelerated our way down. And look at that already for, we're only into really the first full trading day of the month, and it's looking like a big bullish engulfing candle, and that probably reflects the sort of the events of last week, which we'll look at in a moment. So as we have seen that going in one direction, okay, let's look at the Japanese 30-year government bond yields. All right, so not something we talk about or touch on a great deal here, but what we're looking for is invariably to see, what can this teach us? Okay, what can we be aware of? And whilst I will quite happily trade the Japanese yen, it is of course important to take a look at, all right, well, what's the direction of travel of the government bonds. So once again, there are lots of JGB experts out there, okay, who can give you fantastic fundamental insight into Japanese government bonds, okay, and what goes on with them. But really, as I said, I'm primarily a kind of a trader, position swing, intraday, and I trade what I see. And when I look at this, okay, this is what, once again, this is on the monthly chart, and really, we had a little bit of a fright here, okay, back in 2016. Then we had kind of all the kind of COVID fright there. But really, ever since then, these last few years, you can see this 30-year bond yield has been basically one-way traffic, and that is kind of, I think, reflecting the kind of the nature of where the government bonds are going in terms of yield. Now, of course, you compare that to what the actual interest rate from Bank of Japan is, and that is considerably different. All right, and that is part of the problem. The Japanese, Bank of Japan, Ministry of Finance, are very, very reluctant to raise interest rates, okay, to effectively stop the weakening of the yen. But they have a challenge in being able to do that, because invariably the world and his wife has used the yen as effectively free money for the carry trade, and you basically you borrowed money in Japanese yen, and then you well, depending upon your risk profile, you either stuck it in US Treasuries or you stuck it into, US tech stocks or elsewhere. Okay, and for the last few decades, the world has run on that. And so basically, if the Bank of Japan raises those interest rates and raises them as fast as they should, that is likely to see that kind of unwinding of the carry trade. And that's the kind of, let's say, conventional wisdom. Of course, the only thing with the conventional wisdom is that it's as wrong as it is right. But clearly, you can see that 30-year there is tickling the soft underbelly of 4, all right, 4%. Okay, and that is of interest to us. So I think all of us over the next few weeks are going to be interested in the yen, in the Nikkei, in Japanese government bonds, all right, because as I said, there could be real contagion if there's any kind of major moves, and that is why we are interested in seeing how do markets react to the Bank of Japan intervention, but also the US Treasury intervention. Is Besant, he's playing a risky game, but to the winner go the spoils. All right. So yeah, fantastic chart. That's okay. That's just a great trend, isn't it? Absolutely fantastic trend. All right, so let's have another look at Japanese yen itself. So this is my profile for Japanese yen here. So what have we got? Dollar yen on the daily, euro yen on the daily, pound yen, Swiss yen, CAD yen, Aussie yen, Kiwi yen, and the Nikkei. Okay, so this is one of the reasons I have these profiles on various platforms like this. Because hopefully you can just see in one quick snapshot what the story is. All right, and what we see in the story there is basically everything else being sold and Japanese yen being bought, and in particular what we saw dollar being sold and also euro. I think I read somewhere at the weekend that the kind of US Treasury has about 26 billion dollars worth of euros on hand, on cash in the till, shall we say, and they were able to basically to use that. But interestingly, as I said, you can just see across the board what's gone here on here. Okay, and we did see a little bit of it, but if you notice, these daily candles, we're starting to get little wicks here. Okay, now of course the US session could completely change that again, all right, once the Americans come in. But I'm kind of curious to look at, let's have a look at like euro yen. We can see which way it's gone. If I go down to the 4-hour chart, yeah, you can see the way we dropped lower and actually, some we gapped down, fell down, but then actually kind of worked away. Now, admittedly, this could be nothing more than a dead cat bounce, right? That comes up and fills the sort of gap there. There could indeed be that. Okay, I wouldn't be utterly shocked. But yeah, if we looked at all of those yen pairs, this is the 1-hour chart now. We had that intervention overnight. We dropped, and then for pretty much the London session, for all of those yen pairs, we did nothing. There was no real strength of reaction there. And as I was saying earlier, what everyone's going to be looking to try and understand is, with the yen, with the Bank of Japan and the US Treasury and Mr. Besant, does the market basically realign itself and get itself out of the way, or do they just take this as a test and want to sort of push the Bank of Japan and push the US Treasury to see how deep their reserves are, how strong their conviction is. Okay, so as I said, it's going to make for an interesting week. I'll be curious to see what these yen charts are like by the end of this particular week. But you can see for yourself there. That's pretty much that's yen strength. Okay, coming into that. All right, that's what we're seeing. And so invariably, my stam when I do it this Saturday, will be very very much different from that. So this is very much a case of watch and shoot.